Hello folks, this is Raj Sastri from Raj Option Trading. Today is April 4th, 2021. I want to talk about few stock and option trading ideas for the week of April 5th, which is tomorrow. For that, first let's jump into, TTM squeeze indicator by John Carter. And these are the stocks: McDonald, Intel, Dow Chemicals, Medtronics, AbbVie, and so on and so forth. Now let's jump into Thinkorswim platform and look at some of these indicators, some of these stocks, and look at trading ideas. So this is Thinkorswim platform. Um, you know, Basically right now I'm looking at McDonald's MCD. So we have a 1 year, 1 day chart here. That's the first column. Second column I got 2 year, 2 day chart, and then I got 5 year weekly chart, and then I got 10 year monthly chart. So as I scan through this, here on a 1 day chart, I don't see anything here. As I go into 2 day chart, I don't see any squeeze indicator. I think squeeze has just fired on the higher side here. As you can see here, we have red dots followed by a green dot. That means the squeeze has fired, and the lines are above zero. That means it's fired on the long side or bullish side. And also one more thing to look at is really, here the lines on the A wave, which is a shorter term wave, which looks at 4 to 5 periods prior. That's showing a positive indicator. Anytime this line is above zero, that means it's a bullish indicator. And same story here, we got a bullish indicator. The blue lines are above zero. That's a bullish indicator. So we have already a squeeze fired in the 1 day. Now we are looking at a squeeze in the, it's in the form of firing. It might be firing pretty soon in a in a weekly chart. So by looking at here, we have a line above zero here, which is a bullish sign. And let me also expand this a little bit so it's a little bit easy to see. Let's see. There you go, maximize sell. So as you can see here, we got squeeze in the form of forming. So all the red dots, if the red dot, if there is a green dot after the red dot, that means squeeze has fired. But now we have only red dots, which means squeeze is forming up at this point. And as you see here, the histogram is kind of curving, and it's trying to go above. And anytime you see the yellow bar here getting shorter and shorter, that means histogram is going into positive direction as we go forward. And on the A wave, which is a little bit shorter term wave, which measures maybe up to 5 periods before, in this case 5 weeks before, that's showing a positive sign because the line is above zero. And the C wave, which may be around 10 weeks prior in this scenario, that's also showing a positive sign. So anytime you see A wave above zero and C wave above zero, and a squeeze is forming, that means it's going to be on the bullish side. So it's John Carter says there's a very good chance the squeeze is going to fire on the bullish side. So with that in mind, the way to play this is really to buy the stock outright of McDonald, or you could even do call options or call spread. We'll look at some of those things. For now, let me minimize this, restore cells here. And as you can see here on a monthly chart, same story. We got a squeeze in the forming, because we got a lot of red dots here. Let me also blow this up a little bit. So as we see here, we got all these red dots here. After a while there will be a blue, a green dot forming, which means we have a squeeze that's fired. In the meantime, you got the A wave, which is shorter term wave above zero, and C wave above zero. And C wave, or if it is a light blue color like this, that means it's a strength. It shows the strength. The dark blue shows a little bit weakness. So right now we have strength here, light blue color, and here we have yellow color, which is again strength. So because both shorter term wave, which is A wave, longer term wave, which is C wave, both are above zero. This is very good chances this will fire on the higher side or bullish side. So with that in mind, let's restore the cells, and now let's look at few trading ideas here. For that, let me go into one more chart of McDonald's here. This is a 2-year 1-day chart, as you can see, and let me also make it a little bigger here. So as we can see here, we got McDonald, and we have 50-day moving average, 20-day moving average, 10-day moving average. McDonald is above all these moving averages, which tells me it's basically very good strength at this point. It's trending higher. And as you look at here, the volume itself on the balance volume, it's kind of on a lower side. As you can see here, the line itself is on a coming down a little bit. It's on the lower side. But if you look at the RSI is at 63, which is relatively okay, not high like 70 or so. And if you look at the DMI, directional indicator, that's telling me just now red line is above the blue line, which is a bearish indicator at this point. And then we got implied vol. Implied volatility is low here, not too much at all. And then we got check in money flow. Money flow is indicating the smart money is moving into the stock. So with this, I would be super happy if probably RSI is a little bit lower. It's 63. I would be very comfortable if RSI is around 50 or so. Nonetheless, because the indicators are showing us the positive result, I would go initiate a buy order. So you could buy the stock outright. For example, if we go into trade grid here, McDonald. So I could go here, either buy McDonald upfront, like $225.25. I could buy maybe a stock or two at this point. Or if I want to play with the options, I could go, right now 225. If I want to buy option outright, I could buy 70 delta option at $21. It's like 166 days out. I could buy this. Every time stock moves by $1, my option moves by 70 cents, which is a good deal. So I'm paying here $21.15. Expiration date September 17th. So my hope here is really stock is going to go above the current price, and I will be breaking even if the stock goes above 231 by September 17th. Or if McDonald's goes up in between, I could sell this call option any time. So for this, I'm paying $2,115 to buy 100 one call option, which gives me 100 ability to buy 100 stocks. So this is really a long play. So it's not a spread position. I'm buying a call option outright. So this is one way to play. If McDonald's goes up, I make a lot of money with this. I'm paying less money, 2,115 to control 100 shares of McDonald's. If I were to buy it outright, I would be paying around 22,000 or so. Here I'm paying so less. So that's the benefit of trading options. So if I don't want to pay so much money, I could do a spread. As example, 225. I could do 210 and 230. So as an example, if I go here by a vertical spread 210 and do a 230, so I'm playing basically with $20 spread. I'm paying $11.40, and remaining $9.60 is my profit potential. So if I confirm and send here, you can see here my max profit is 860. I'm paying I'm paying right now 1,140. This is one way to play. Other way to play is really, if you don't want to pay so much money, you could even do a little differently. As an example, if you're really bullish, you could do 220 240. So if we do something like it's a little more bullish here, 220, 240, or you could even do 220, 230. If you do this spread, you're paying $5.13, and it's a $10 spread, remaining $4 and 87 cents is your profit potential. So if you see here, it's almost like you're almost doubling your money with this. This is a conservative way to play. And you could also increase the spread. You could buy a $20 spread, 210 and 230 and 250, or 220, 240. It's a $20 spread. Here profit potential is more. You're paying $8.35, but your profit potential is 1,165. So this is where you are really confident McDonald's will go up. You could buy a $20 spread here, and you're paying 835 to make 1,165. This is another way to play. So with that, let's look at our next stock here. The next stock is Intel. Intel has got a new CEO, Pat. He was I think he was in VMware before. Now he's in Intel. He was an old Intel person, so I think he's going to be great for Intel. So with that Intel, if I go to here, TTM trend here, as you can see here, we got a squeeze forming up in a daily chart. It's one year 1 day chart, and we got a squeeze in the making in a 2 day chart, and also a squeeze in the making in a monthly chart. And one thing we always look at is really when the squeeze is about to be making, where is the longer term C wave? As you can see here, C wave is above zero here, and it's also showing the light blue color, which is a strength. I would have loved to see the short term wave also above zero here, but right now it is not. But it's in the I think it will come above zero as we go forward. But I'm confident because we got the longer term wave above zero. We can be confident if this squeeze fires, it will fire on the bullish side. And also Intel has taken so much beating in the past with the old CEO. I think a CEO change is good for Intel. Same story here on a 2 day chart. We got a longer term wave above zero, and it's a light blue, which is a strength. And shorter term wave, I think right now it's below zero, but it can turn and go above zero. And here on the longer term, like monthly chart, 10-year monthly chart, we got a squeeze in the forming. The moment we get a green dot here, that means squeeze has fired. And here, both shorter term A wave is above zero, as well as longer term C wave is above zero. That shows the strength. And basically this is going to fire on the bullish side for John Carter. And then let's look at a little bit different chart here. So if you look at this chart here, we got Intel, nice looking chart. It's above the 50-day, 20-day, 10-day moving average, which is good, trending up. On the balance, volume is moving up, so which means here people are buying into the stock. RSI is 56, which is good, so it's not high. When we buy call options, we want our RSI to be a little bit lower, so that way it's not a overbought type territory, it's oversold type territory. And also here, the blue line is trying to go above red. Right now it's not quite there yet, but right now it's a bearish sign. But if this blue line crosses above zero, it will become bullish. And implied wall is low. As a buyer of the option, you want implied wall to be low. Right now it is low. And check in money flow is kind of showing us smart money is moving into the stock. It's kind of trending up, which is a good sign. So with that, we could go and buy. Intel is very low dollar stock, $65.55. You could buy some of this Intel, outright. It pays a good dividend. I think yield is pretty good for this stock, 2.15%. You could buy Intel outright and hold it. Or if you want to play with the options, you could buy say delta 70 or 69 call option here. You're paying very less here, $6.70. And if you do this, you'll pay $670. And if Intel goes above $66.70 by July 16th, you'll break even. If it goes even higher, you will make a lot of money. So this is one way to play. And if you don't want to pay so much money upfront, you could also do a spread. So Intel is 64. I would buy 60-70 spread, which is a $10 wide spread. So if I do that, so 60-70 right here, so I'm paying $4.62, not too much at all, and I will be making $538. You'll more than double your money with this $10 spread. If Intel stays above 65.62, which is very close to current price, you'll break even. So this is a good way to play. It's a spread. You don't lose too much money with this as long as stock stays above the break-even price. So this is a conservative way to play. You don't make a lot of money, at the same time your risk is limited to $462. So next we'll look at one more. For that, let's go to Dow Chemical, DOW. So so if I go to chart here, TTM, TTM squeeze. So on a daily chart, this is 1 year, 1 day. On a daily chart, I got a couple red dots forming here, which tells me, it's going to enter the squeeze mode. Squeeze is going to fire any time. In the meantime, longer term C wave is above zero, and it's also light blue, indicating it's the strength, it's above zero. And the shorter term C wave, it's as you can see here, the yellow line means it's a strength. Yellow line, if it goes above zero, that means that's what we want to see. As you can see here, if I make it a little bit big here, yellow line is getting shorter and shorter. This whole oscillator can oscillate above zero anytime, which becomes a bullish signal. And I think we have only squeeze in the daily chart here, which is okay. You can also look at as you can see here on the 2-day chart, the bar is above zero, and even the shorter term wave is above zero, and same is the case on the weekly chart, above zero, and here also above zero. Same story on the monthly chart. Overall, I think it's a good. You could buy Dow Chemicals. Let's go into a little bit smaller chart here. If you look at this chart, very nice trend here. For example, it's above 50-day, 20-day, 10-day moving average, which is good. On the balance volume is also pretty nice. The line is pretty nice here. And DMI, we have blue line above red line, which is a bullish indicator. Implied vol is low. We would love to buy options when the implied vol is low, and check-in money flow is going up, which means stock smart money is moving into the stock. So with that, if I go into option chain here, Dove is a very low dollar stock here, pays 4.33% dividend. You could buy the stock outright, not a big deal. If you don't want to do that, you could even buy 166 days out option. For that, typically we would love to buy either 70 delta or above. So if you buy 70 delta, you're paying $10 to control 100 shares of Dow Chemical. And if if the stock stays above 67.50 by September 21, you will make money. So it's a good way to play. And let's also look at spread ideas. So if stock is at 64, you could buy a spread, say 60-70 spread as an example, buy a call spread here, 60 and 70. So if you do something like this, you're paying $4.90, which is 490. You're making 510. You're doubling your money with this. low risk. Your risk is just what you pay here for $490, but opportunity is to double your money. So you don't need to wait till the expiration. You can sell this spread anytime if you're making profit. So next, let's look at one more idea, which is Medtronics. Medtronics is a medical device maker. They got very good surgery machines and whatnot. And with all the reopening and people who are putting off their elective surgery can basically go into get some surgery done because they've been putting it off for so long. So with that, let's look at TTM trend here. TTM was state the TTM squeeze perspective. We have a squeeze on the daily chart here. As you can see here, we have lines above zero when it comes to the longer term A wave. Shorter term C wave also just got above zero, which is a bullish sign. And we got a squeeze in the 2-year chart. And if I make it a little bit big here, the longer terms A wave is above zero. C wave, I think it's bar is getting shorter. This might go above zero anytime, but at least we are happy the longer term A wave is above zero, and we have a squeeze in the weekly chart. And if I make it a little bigger here, the line A wave, C wave is, I think it's just A wave is just above zero if I squint really hard, or maybe on the line. But A wave, longer term A wave is above zero, which is a bullish sign. And we also have a squeeze in the monthly chart, and A wave is above zero, C wave is above zero. So overall, I feel it's a bullish sign. Medtronic stock can really do well because people are going to get surgery done. They've been putting it off so long. So with that, ideas for trading, you could buy Medtronic stock outright. It pays 1.96% dividend. And if you want to play with the options, you could also go into Delta 70 option here, which is 69 is close enough. You could pay $12.30, which is around $1,230. Oops, sorry. You can yeah, right here. You could buy Medtronic by paying $1,230, and your profit potential is infinite. You'll break even if the stock stays above 122 by August 20, which is, I think, which it can stay above 122 in my mind. And if you don't want to pay so much money, 1,230, you could buy a spread. For spread, you could look at 115. If you're very bullish, you could do 115, 125, which is a $10 spread. So for this $10 spread, you're paying $4.58, and you're more than doubling your money. You're paying $4.58, you're making $5.42. This is one way to play. You could even expand the spread and make it 135, which is even a little more bullish. So this is another idea. You could do something like this also. So next what we'll do is we'll go and look at one more. I have the full list here. You can go through this. We covered, I think, up to Medtronics. You could do same strategies like we talked about in AbbVie, SSNC, all these stocks here. Next, one of my favorite way to play stock market is basically buy the stocks on a pullback. So this list I compiled here. I look at all these stocks which are doing considerably well, but year to date they have fallen off so badly. As an example, this frequency Therapeutics, I think they had some issue with one of their drugs and approvals. I think it fell off the cliff. Similarly, I got this in a descending order. The stock on the top has lost most, and from there onwards, it's a little bit less. So I highlighted some of these stocks in bold here, mainly because these stocks have fallen off so much. And if I look at their 1-year sales growth and their quarter sales growth, it's positive, and they got a positive gross margin. So at this point, I feel pretty, confident on buying these stocks like, Amicus, Sarepta, ACADIA, C3.ai, even frequency for that matter. I can be a contrarian buy some of this, given they got positive 1 year sales growth and quarter over quarter sales growth. So I would, buy some of these stocks. And if you don't want to buy it outright, you could do same strategies I talked about. You could buy a Delta 70 call 3-4 months out, or you could even do a call spread. If you do a call spread, you would do, if it is 76 in case of Sarepta, you would do 70-80 spread. So which will, you'll not pay too much money, but at the same time participate in upside move of Sarepta. So with that, these are the good stocks. If you look at some of these stocks, for example, Inseego is a $9 stock. They've fallen off so much, 36%. But as you can see here, if you look at the weekly, on a weekly basis, they have showed some improvement. So I look for, stock fell off year to date. But if you look at, monthly and weekly, if you see some improvement, stock is going to, bounce back. As an example, if you look at one more stock, Bit Digital, they fell off so much, and on a weekly basis, there is some improvement. And same thing can be said about Unity Software, which is a very good company. These guys are into video gaming, which is a good positive trend. Same story here, 34% year to date, but there is improvement on a monthly and a weekly basis. So with that, these are some very good ideas you can look at. I hate to chase the stocks when they're so high, but this is one of my favorite ways. Your stock is fallen off the cliff, but there is some improvements weekly, monthly performance, and there is a positive sales growth and a good gross margin. These are some of the best stocks you could buy. Given there is they are on a pullback, but still they're showing a positive growth when it comes to sales growth. So with that, thank you very much. Happy trading.